Hello everyone and welcome to the Brisbane Property Panel. We've got some guests in today. We're just going to chat about Brisbane growing and where everyone is going to live. So I'd just like to introduce everyone in our panel. I've got Jonathan Bell from Housemark, Andrew Burke from Ray White Special Projects, Alex Stefan from Stefan Town Planning, and Melinda, Jennison, and myself from Streamline Property Buyers. So interesting, before we do start, Andrew, you actually said something before we started that people love property and they're obsessed by property. So I grabbed that and I thought that's a good way to start to talk about property in Brisbane and how Brisbane's changing and growing over time and where we're going to move forward in the future.
Yeah, look, I think, tonight's topic is really about understanding, where is everybody going to live? We can look at the population movements that have occurred into Queensland, more specifically into southeast Queensland, if we want to get more granular, into Brisbane itself. Not only in the most recent years, but certainly in the last 12 months, there's more people that have moved to Queensland than any other state, and that's been combined as a result of both interstate migration off the back of COVID. We've all heard that story, but also now that the international borders have opened up, we've actually got more international migrants coming into Brisbane. So the combined effect is we've got more and more people relocating to Brisbane, and yet we have a housing crisis. We've heard this in the news, you've heard that there's an undersupply of rental properties, and that's the issue that we're really wanting to tackle, because this is not something that has developed overnight. This is something that has developed over many, many years. And it's great tonight that we've got Jonathan to provide some perspective from property management perspective. We've got the town planning expert, Alex Stefan, to help us understand how, changes to planning schemes and government legislation have actually led to the current issues. And we've also got Andrew, who's going to help us to understand what that development pipeline in terms of land supply and medium density development sales looks like. So we've got a good group of experts here to really help you understand what's actually going on today, because this is not an issue that's easily resolved in a quick way. And I think that's what's most important to take away from tonight, and hopefully we'll be able to help you with lots of facts around what's really going on.
So we'll go through a few different topics tonight, and we'll share it all around for everyone to sort of throw in their knowledge. Things like land supply, house and unit supply, council approvals, infill opportunities, legislation changes, infrastructure, zoning, and sustainable growth. I guess from a grassroots point of view, we need land and land supply. So Andrew, what are you sort of seeing from the special project side of it with that land supply?
Yep.
I mean, obviously at the start we need the land before we can do the houses and the approvals and the rental properties. So I guess starting at that grassroots side of it, what are you seeing out there on that supply?
Yep. So obviously it's undersupplied. So I work for Ray White Special Projects. We specialise in residential investments, blocks of flats, or mainly what we do is residential development sites. So like all things, there's markets within markets. So we sell land to developers who'll do units, townhouses, and subdivisions. So if you look at, I think the problem we're talking about, housing affordability and a lack of supply, there's two issues. One is this, in the paper at the moment, just this massive undersupply. Where's everyone going to live? Like, that needs to be solved quickly, but there's always been this undersupply in Brisbane, southeast Queensland, the last 10, 15 years. That's a broader subject. So really, it's land supply, but I think really a more accurate description would be active land supply. So it's all driven by, and Alex will go into this in more detail, is the Southeast Queensland Regional Plan, where layman's terms, the governments get together and say, this is the land we're going to develop in Southeast Queensland, here's the footprint. And so from our point of view, because there's so many hurdles to overcome if you're outside that footprint, everyone just says forget about it. It's pretty hard these days to have lazy capital say, I think in 20 years' time that'll be great, I'll just plonk 5 million here. That just doesn't happen these days. So what we're seeing is a real lack of active land. So the overlays, the increasing in overlays, just because the government will look at the active land, so they look at the supply, but they won't realise the overlays that impact it. And not only that, there's increasing amounts of overlays that don't alter the plan. So I think it was 2017 was the last regional plan, and they're reviewing it now, but to me, it's everything, because there's lots of issues to drill into there. South East Queensland's very fragmented, and for a development to do well, it needs scale. So what we're seeing on the ground is, look, it's a bit of a slightly quieter time, just what's going on in the world, but these are long-term projects, and nothing could be stronger than South East Queensland's market. So the medium to long-term, people are taking a very bullish view, but they just can't get their hand on land. So they want it, and we just don't have it.
Interesting.
What about and I know we talked about this a while ago, I think on a podcast we had you, Andrew, and we were talking about the land supply then, and we crossed over with a little bit of the construction issues and the supply of materials and things like that. How is that going at the moment? Because I know we've seen construction change a little bit. I think it's softened a little bit, and we're starting to get materials. What about on that civil side of it?
Well, it's the number one issue. I mean, it's actually more. It's changed the market far more than interest rates. It's up 30-40%. And if you're talking land subdivisions, quite often you're talking on the extremities of town. So it's more, it's more resistant to, the big changes that happen. So it is a big factor. 30-40%.
Yeah.
It's huge. So
Well, the cost of, so we do development management in our company, and the cost of doing a 1 to 2 lot subdivision over the past, probably since COVID, average was about 120 grand, now it's 200. And then you add your tax, agents fees, everything on top of that. To split a block of land now, you're looking at 250, 300 grand, versus 2 years ago is 100 to 150. And just trying to get, getting someone to build these projects is very hard. We have sites that we've been just trying to get quotes for people to build them and this is subdivisions, so to build the subdivisions for 6 months. We had someone pull out today, just like, come on mate, it's time to go, let's lock in some dates, you've signed the contract. They're like, look, we just can't do it anymore.
So what about when you talk about that, Alex, and council side of things? Is the timing of the council keeping up with any approvals that are wanting to go through?
Yeah, I think council's doing an okay job at it, to be honest with you. They're really short-staffed, just like everyone is. Yeah. But they have legislative deadlines they have to stick to, so they're getting it. But I think what Andrew's saying, in the wider land use, land supply, there really is that problem of actually having accessible land that's ready to go. Yeah. Because you've got this SEQ regional plan. In the planning world, it might shock you, but it's pretty much completely ignored that plan. The state government will go say all this fancy stuff, will go, this is where we want growth to be, and then you'll have local councils be like, we don't have infrastructure over there, we don't have a local government infrastructure plan in place, so we're not doing that. And the perfect example of that is Brisbane City Council, when the state government in their SEQ regional plan said, we need more townhouses, we need this to fill this gap in this missing middle. And what did Brisbane City Council do? 6 months later, they banned townhouses. Yeah. So it shows you the accountability of local councils to these regional plans.
And just to help people understand, when you say they banned townhouses, what they proposed was some changes to car park ratios that made it impossible to build townhouses feasibly, and banned townhouses in emerging community zones where they otherwise would have been able to be built. Is that what you're referring to?
Yeah, so when I say ban, so it's kind of it's odd thing. So they didn't ban townhouses. they removed the ability to do them in low density zones. And basically from that point forwards, and this is what people don't see on our end of it, you've got a politician saying we're going to ban townhouses, or the career mail, or whoever coined that phrase. And then how that filters down to us is every townhouse development application that we lodged from that point forwards was a nightmare. Unless you are 100% code compliant or happy to go to court, it was just, so people just started not doing them. And now we're seeing the pain of that.
They also touched a bit on that, I think, on the deep planting and things like that, didn't they? So not just the car park ratios, which become unaffordable for developers to do, but also the percentage of the land that you actually had to do deep planting, which obviously you can't put a building on a deep planting area. So it just chewed up so much of the land that it become unaffordable for developers to really go through, and it wouldn't stack up, which if it doesn't stack up, a developer won't develop it, will they?
Yeah, and it's funny, I had a conversation the other day with someone who was talking about buying a house, or their friend buying a house. I can't exactly remember, but they basically said I can either buy a house out at like Lowood, or I can buy a unit. Townhouses aren't affordable for them anymore, and it's like, well, townhouses were meant to be the thing that your generation could afford, but now
Couldn't agree more. It's that middle ring product, the medium density middle ring product that we're lacking, as well as the land supply.
Yeah.
And I think just from a buyer's agent's perspective, Jonathan, you might be able to talk to this from a landlord's perspective, or what tenants are looking for. There really is low stock in terms of what you can buy or what you can rent that's in that townhouse space. And that is because they've stopped building them. So we've got a product that's becoming more and more scarce. And of course, when we look at purchasing an investment property, we're looking for something that is scarce, because generally that's going to create a situation where you've got a scarce product. If you've got high demand, you're going to get that upward pressure on prices. Now, we've definitely been seeing that townhouse market really grow in value, certainly over the last 18 months. At the same time as the housing market has been retracting in terms of median values. So, it's important for people to understand that these are decisions that have been made along the way by council and government, legislative change, I guess you could say, that's really caused a slowdown in the development of products that have been essential, but developers just haven't been able to bring them to the market. And of course, that's impacted on the supply side of things.
I will throw to Jonathan quickly on that, and we've talked about the unit supply in Brisbane and how I think people have changed the way they think a little bit.
Yeah.
We've all grown up, sort of everyone up here with a large block of land, and we like 800 odd square metres of land where you can have a cricket pitch and a pool and a shed and everything else. And I think we're starting to change, whether it's because people have moved up from down south and that's the lifestyle they're used to. Lifestyle, which is another thing. People want to live close to cafes and restaurants and the transport and all those types of things. So that unit space is probably some area that we could probably capitalise more on in that infill and growing Brisbane a little bit more.
Yeah.
How do you see that on the rental side of it?
Yeah,
Is it still popular?
Yeah, exactly what we've heard here is identical to what's happening in the rental space. So we're finding that middle tier is really strong. Vacancy rates are really low. All that media around the lines outside the houses, and everyone's seeing this extremely tight rental market. That's really happening in those units, townhouses in that middle tier between, say, $400 a week and $800 a week. That's why we're seeing that demand.
Which is not surprising, and I think, we all know through what we've read and seen in the media just how strong house prices in Brisbane grew in that post-COVID period. When we look at the housing market, we had more than 40% growth in Brisbane house prices across a period of nearly, or just under 2 years. Now, we have seen those prices come back a little bit since then, but that's really strong growth. And because of that, we saw an affordability shift. People who previously could afford to purchase a house no longer could afford to buy a house, and so they'd compromise on the product type to stay in the same locations. But it's the same in the rental market. Previously, what people could rent in and around the inner and middle ring suburbs, they're having to now make a compromise on potentially the product type and looking at townhouses and units as an alternative to stay within an affordable price point, because we all know what's happening in the greater economy with interest rates rising, cost of living increasing because of the inflationary pressures. It is putting pressure on household budgets, and so people are making compromises, and we're seeing that play out in the housing market as well.
Yeah, and we're seeing that there's a shift in those younger generations. They're happy to compromise. They don't want the house out 30 kilometres away. They're happy to have the townhouse or the apartment closer to the city with amenities around it as well.
Especially the way Brisbane's growing.
Yeah.
I mean, you get closer to the city. I know we talk about the Olympics in 2032, but the amount of things in infrastructure and Queen's Wharf, we've already seen Howard Smith Wharfs and Dexus happening down on the river. Everything around the CBD is attracting people to live in those areas, and no one wants to sit around on the weekend and mow their lawn.
Exactly.
They actually want the lifestyle and go out and use the entertainment and use the city, which is actually changing so much.
100%.
So.
And I'll also just add to that, with the Olympic Games, and it's an event everybody's talking about, the Olympic Games will change the way we live and commute around Brisbane, and that's because of the infrastructure that's being developed as we speak and will come to prepare for that event. But in actual fact, 57% of the major Olympic Games venues for the Brisbane 2032 Olympic Games are being located or will be located within 5 kilometres of the Brisbane CBD. Now, this is an Olympic Games that is very different to other Olympic Games events that have been held in other host cities. Because of that, we've got to think about how that might change the way we commute, the desirability of certain locations around the city. And that all has to come into play in terms of how are we going to house people in the future. And Alex, I guess it leads me back to you in terms of, land zoning for higher density development. Brisbane cannot expand out any further if we don't have the developable land or the land that can be developed, and therefore the only way to supply more housing for residents and tenants relocating to Brisbane is to go up as opposed to out and see some higher density development.
Yep.
What are you finding in that space?
There's a lot of dormant, medium and high density residential land, like a lot of it. And a lot of it is fragmented still. So when I say fragmented, I mean, there's 400 square metre lots owned by 10 different people. All of those need to be bought up and amalgamated to do a high density development. But I think those kind of pockets, like Upper Mount Gravatt, there's some Darras, pretty much the whole suburb of Darra is medium density, or parts of it. So there's all these areas that will come on market and start developing, I think, leading up to the Olympics, 5 years out. Smart people will start getting their approvals in the next couple of years and just sit them in place and line up builders and whatnot. But yeah, I think there's definitely a supply there. And I think coming up to the Olympics, whenever anything like this happens, it happened when it came up to the Commonwealth Games, council just kind of, if you're going to build it, they'll approve it. So if you can say, like, here's my client, they're a seasoned developer, they just finished this project, they really want to start on this one, we just need whatever it is, we need one more unit, or it needs to be 1 story higher. Coming up to those Olympics, there'll be pressure from the pollies just to say.
Probably on the ground and that sort of issue, it's unlike land which has zoning and physical constraints, with the exception of fragmentation. I would suggest that medium to high rise is entirely possible.
Yeah.
It's just that we're in a current blimp in the market where construction costs has exceeded everyone's expectations, so it's just not stacking up at the moment. So people have bought sites based on how much they think they can develop. They've paid, it doesn't stack up with construction. Not only that, if you're going to buy a site, you're going, well, construction hasn't really settled yet, so it's very hard to price the site. So if, because something's got to give. If construction goes up and we know what sales are, the land's something that's got to give, but they won't commit until that construction price is at least stable. We're hearing materials are stable, but labour's still, they can't quite price it. So I keep saying that there's very few projects of scale in units that are being developed in recent times. There's sort of 2 developers, and that's about it. There's lots of small boutique stuff, but in affluent areas, but there hasn't. But I think that'll change. I just think once this short-term situation steadies down, in the next year, all those sites you talked about will get cracking.
Yeah, and it's it's kind of basic math, really. It's like 10 years ago, people would buy those sites and go, sweet, how many units can I get on it? Oh, 10, can we get 12? We'll give you 11. Sweet, let's start building. Now it's like, all right, we only just afforded to buy this site.
Yeah.
And now how much is it to build it? We have no idea. What will council approve? We have no idea. So just that uncertainty in the market. And when it starts to get more certain, the prices go up. You know how much it's going to cost. Council's approving things.
It'll stack up because that detached dwellings is all driven by the difference between what can you buy a detached house for versus live in a unit or a townhouse. And if it's gone up 40%, I'll come back a bit. Units are going to stack up once this construction thing calms down.
Absolutely, and we've already seen that the unit market's obviously continued to grow at the same time over the last 12 months. That the housing market has been retracting, so we've seen that shift in demand, and we've also seen through rental data that unit rents have now grown at a faster rate over a 12-month period than house rents. So we're starting to see house rents stabilise and unit rents continue to escalate. And again, Jonathan, what's your comment on that? Is that based on an affordability shift or something else?
Yeah, I think since COVID we've seen this huge increase in rental prices and housing's just exploded, and it's just started to stabilise now. And I think that the unit prices were about 2 years behind, and now we're seeing that huge increase in rents for units. So it's really interesting. Like that executive rental market was so strong from COVID. Everyone's removing their commercial tenancy and working from home and paying 6 months in advance. That has stabilised now, and people are a bit more picky on what they want. But now we're seeing that same thing in the units. So I think the units are now following what the houses were doing.
I was at an economic update lunch on Friday for Bank of Queensland, and just listening to their chief economist speak, and he was talking about not only are we seeing fewer houses being supplied to the market because construction's down, the constraints around development, but we're also seeing a shift in the house composition off the back of COVID. Now, you'll recall during COVID, there was a flight to bigger homes, people wanted their space around them. We're actually starting to see a reversal in that shift, and household size is starting to reduce. Now, whether that's because we started, people were living in close proximity to each other because they were in so many lockdowns, they decided that they needed their own personal space. So the size of each household is now starting to decrease again, which means we need more dwellings to house the same number of people if we're going to have fewer people in each dwelling. So you can see how this the demand for property in Brisbane and southeast Queensland as a whole is being driven by so many different things: rising population, change in the composition of households, a lack of supply. And if we look at what's happened over the last 18 months even in relation to properties that are available for rent, we've had some big legislative proposed changes from our state government here in Queensland, specifically around proposed land tax changes. This really had an impact on driving a lot of investors out of the market. The huge price gains that we talked about, where we saw house prices increase about 40%, that came off the back of about 10 years of very subdued growth in Brisbane. So a lot of investors actually did cash in, and those investment properties were being purchased by owner-occupiers predominantly. So what we saw the number or the volume of investment properties actually shrink at the same time as we saw this demand increase. So not only have we had a situation where we've seen a slowdown in the supply of brand new properties come into the market, we've also had a retraction or a reduction in the number of established rental properties available in the market. And again, that's just caused an even larger imbalance at a time where we need housing to house Brisbane residents.
I was going to touch then, and I know Melinda's got a better memory than probably all of us, but we were at a breakfast again about a week or so ago. It was the PIPA breakfast, so Property Investment Professionals of Australia, and they were talking about the rental market and a lot of it, and how, again, not being political, but how the government was bringing in all these different rules and then looking to put caps on rents and all these types of things that they just seem to throw at it. Melinda, you can probably give us a little bit of a summary on who owns basically, or who basically invests into property to help the rental market side of things.
I know exactly the data that you're wanting to reference here, and this will come to as a shock to many people. The Queensland Government supply only 3% of housing to accommodate private tenants throughout the state. That means 97% of rental accommodation is provided by private mum and dad investors. Now, that is out of proportion with every other state in Australia. So, the Queensland Government really haven't had a plan in place to bring more rental properties onto the market to help to alleviate the issues that we're having in terms of supply. And it's no quick and easy solution to do that. But at the same time, 97% of that of properties are provided by mum and dad landlords to house Queenslanders who do rely on rental properties to call their home. And at the same time, these private landlords have been penalised in so many ways. You'll recall at the federal election that was now nearly 4 years ago, there was the proposed negative gearing changes. That does spook people, that scares people, and any legislative change like that can cause a change and a shift in behaviour of investors. Off the back of that, we had the Royal Commission. At that time, we saw investors hit and penalised with higher interest rates than owner-occupiers. So again, a disincentive for people to purchase properties to provide accommodation for Queensland residents. Then we had the land tax changes that were actually legislated, but they were repealed, so they have been withdrawn. And now we've got the Premier talking about changing those rental caps. That was a proposal that was put forward just over a week ago. It has been clarified now that there's going to be no caps on those rental limits, but they're going to limit the frequency in which you can actually increase your rents as a landlord. So you've got a government that I might actually also add to that during COVID, we also saw the government step in and actually overrule a private contractual relationship between a landlord and a tenant, whereby they put those, rental. Yeah, they basically said you can't actually ask your tenant to move out of the property, and also if they can't pay rent, well, you can't, kick them out of your property. Which all made sense at the time because it was a very unique situation. But all of these things really were to provide a disincentive to those people that are providing the rental accommodation. And it's no wonder that we're seeing more and more people leave the market, cash out, sell up, and that's why we're seeing this reduction in the supply of these rental properties, and it's contributed to the situation that we are currently in relation to, a real undersupply of properties for people to call home.
We're seeing that significantly. So principals all across Queensland have struggled to build their rental businesses, and they've all shrinked over the last 5 years because people are selling in cash in. And then, it's been so interesting to watch. And then also the building crisis, like landlords, the cost to own a property now is significantly higher. And then there was a mold epidemic, there was a floods, there was a building crisis. So throughout all those reforms, they've been hit with all of these extra things and then while the sales market's really strong, they're like, it's not worth it anymore. So it's been, but I do believe that the people who hang in there are the ones that are going to prosper from the rental market, because the less supply, the more rent and the bigger deals they're going to get.
Yeah, and all of that, people do talk about the landlords are the ones that are getting greedy and they're putting the rents up, but the landlords are the ones that are copying all the costs of all these things, and the interest rates going up, the holding costs, they've got to pay for it somehow. And they're not overcharging, they're just charging what the market is actually saying it's worth.
Yeah, I was reading something yesterday, it's actually cheaper to rent than it is to buy at the moment. So the cost to actually maintain and hold an investment property isn't cheap. But I think that the tenants are understanding that now. Like it is, we're finding that throughout COVID it was really tough to get rental increases without getting a few nasty emails here and there. But now, because the media is all about the rental crisis, tenants are more accepting of increases.
We're finding when we sell the blocks of units that the owners are using it. Look, they're not being greedy. They are getting more costs, but that interest rate's significant. So if they're getting, whatever return they were getting, if the bank cost has gone up by 1-2%, they're looking to pass that on to get the same return. So they have to push the rental up. But
I think the thing with that, Andrew, is that tenants will only pay what they can afford, and they'll only pay what the market determines as current value. If you advertise a property for rent and the price is too high, you won't get tenants applying. So it is subject to supply and demand to some extent as well. So absolutely, as landlords, if we're being told that, we should be, the government's trying to control the amount of income that we can generate on our rental property, and yet there's no corresponding cap on the expenses that a landlord has, again, more of a disincentive for...
How are they going to combat that, do you think, Jonathan, that proposed rental? Surely a landlord would just think the worst case scenario and hope the market will support it. To me, it's just very inefficient.
Yeah, it is. I mean, Melbourne's in front of Brisbane in regards to the legislation, and that's much more tenant biased. So as long as you provide evidence to show about rental increases, and the same as the land tax, a lot of things have been scrapped. But I agree with you, Melinda. They should be incentivising investors to buy, and that's how we're going to increase the supply. But none of these reforms and none of the rental changes have made any impact to our business. You just have to be more diligent, and you have to really make sure that your ducks are lined in a row to make sure that you don't fall liable to a tenant being able to stay in the property and not get rent increases.
If we talk about supply, and there's two ways to create it, and Alex and Andrew, you're in the front the front line for understanding new supply and how we can actually create new supply of units, houses, land, etc. Whereas investors are, and potentially the government and policy around how to incentivise investors, they're in control of established supply, and this is a more immediate form of supply, and potentially incentivising investors to actually purchase properties to make them available for those tenants that need them is going to be the fastest way to resolve the current issues. But that's just not happening, and in fact, you know, I'd eat my hat if that sort of thing did happen, because everything that's happened in the last 4 or 5 years has really been against the landlord, against the investor, as opposed to trying to incentivise them to help solve the crisis that we have in terms of housing.
So infills, like that supply, as Melinda said, what we see as buyers agents, when you look at existing property, listing numbers are extremely low, so there's not a lot out there for people to buy. You talked about some properties, like areas to develop, Alex, and from you guys down the end, where do you see that sort of happening? Is it infill? Is it how do you think they can improve that side of things?
Well, if the numbers to get a larger amount of dwellings built more quickly, to me, there's two options. There's land on the extremities of town. Look at southeast Queensland, north and south of Brisbane are they're getting pretty full. A little bit of opportunity still in Logan, but east, that's the water, so you can only go west. So there's an infinite supply of land going west, but you've got to have the infrastructure to develop to allow that to happen, and a little bit that Caboolture West, which is northwest of Brisbane. So to me, Alex will speak to this, you've got to unlock that land by the councils and governments working more closely with the environmental and all those sort of overlays, and including the technical aspects like sewer and water. So just because something looks like it can be developed, actually talk to the council. And to be fair, I think Mike Kaiser, who's the Director General, he did come out and say, yeah, we need to do that more. He took ownership. I thought it was really good. So look, that needs to happen on the land supply, but that answer your question, that middle range, which is the units and townhouses, I think the townhouse is the sleeping giant here. I think that's what needs to happen.
Alex, are there any ideas that you have in terms of how that can happen? Because you spoke before about, you know, a lot of the land that could be developed in that way is owned by a number of individual lot owners, which makes it very difficult for a developer to acquire multiple sites, let alone then, you know, allowing the feasibility to stack up to construct the property. Are there any solutions that you can see in that regard?
I don't think so. I think it's just like a natural, like we've seen it happen all through those urban footprint areas and emergent community zones. You know, there'll be a couple of older owners who've lived there forever. Eventually time will go on. You know, the markets will fluctuate. They'll grow older. Someone will come in and convince everyone in that street to sell. And I don't think there's anything in particular that could incentivize those people to sell earlier. Even if there was, I just can't see how it would be legislated in a way that everyone wouldn't be annoyed.
So if the infill side of it was to improve, say for example, council was to change those plans that they have about sort of stocking townhouses, and as Andrew said, townhouses are probably the key to that sort of thing. If that was to change that infill and people could do that, maybe that might encourage the older people to sell out and say, well, that's actually, someone's going to pay me this much money because it will stack up now for a townhouse. Yeah. And then people can actually then come in and develop and create a little bit more, I think, a nicer infill, because, you know, I know that people do talk about granny flats and things like that. Not personally, not a big fan of it, but I have my personal view on that one. But, you know, I would rather see like a townhouse development. It's a bit nicer than dropping granny flats into the back of sort of properties as well.
Well, the other thing too, and I don't know the economics of this, and you guys might better than I do, but most, like the LMR sites, low medium density sites, which are the infill sites in most local council regions. So if you can do townhouses there, you can also subdivide it. And I would say in the past 2-3 years, we probably, in those sites, like we used to do like 5 a week. It was crazy. Like it was unsustainable at the time. And then now we probably do like 1 a month, but for townhouses, but subdividing those sites. Everyone's like, why would we do 3 cramped 3-bedroom townhouses when we can split that down the middle and do 2 big nice houses on 300 square meter lots? So I'll get, someone's going to like shoot me after I say this, but most councils don't let you subdivide in those areas because they want high density development. So Logan, you can subdivide in low medium density sites, but they don't want you to.
Yeah.
So if Brisbane did that, then all of a sudden all of those LMR sites might end up with townhouses on them. The flip side of that is being able to rent your granny flat now. You could actually get, as an investor, you can get a high density by building 2 houses and 2 granny flats. So, it depends what you're trying to do. Like, if you're trying to make money, you'd probably be best off subdividing and doing a house and 2 granny flats because you end up with two big assets, land, 4 rentable incomes. But if you're trying to solve, get everyone a house, then get everyone a house that they can afford, then probably townhouses is better.
So you said that if you're probably going to sell it, is that what if you're going to sell it, you'd think the 2 houses, 2 granny flats?
Yeah, if I had one of those sites and I was going to develop it, I'd be doing subdividing down the middle, building 2 houses and 2 granny flats.
And what if you're going to rent it?
Granny flats are tough.
Yeah.
Granny
Yeah.
flats.
It's interesting because you look at the 2 sides of it. A developer to sell, an investor to rent.
Yeah.
It's completely different
Yeah.
mindset, I think, on that side as well.
But I think to clarify, this is all long term. This is not going to solve the process that the papers are screaming about. Where's everyone living? This takes a long time.
And I think
So the legislative changes are the ones that can happen quickly, or the financial incentives or tax incentives, whatever they are. So this is all just for Brisbane, Southeast Queensland's growing population and affordability. That to me is the answer to the stuff we're talking about there. But they're 2 issues. It's like the long term and then how to solve this people queuing around the block situation for a place to live.
Yeah, I think this all protects, all these supply issues protect our current investors though. Like there's such a stability for their rental yields over the next few years to come because there's no supply.
Yeah.
So we're just going to continue to see increases in rental yields.
And that's something obviously that the government don't want because they don't want the cost of renting to continue to escalate because it is becoming unaffordable for a lot of people. We assess rental affordability as any rents being 30% or less than the total household income of those who occupy the dwelling. Now, of course, that's going to be specific to different demographic groups and different locations because people on different incomes will have different levels of affordability in terms of what they can and cannot pay for rent. But we may start to see a shift in what people are prepared to compromise on in terms of rent. And Alex, to your point, I know that granny flat legislation is something that the government brought in as a way to try and free up some rental supply to bring more properties onto the market. And just recently it has become legislated, is that right? Or it's in the process of being legislated that that's also applicable to the Brisbane City Council region?
Yeah.
Because it was never applicable to our council region.
Yeah, so it's funny even just hearing what Jonathan just said, like it's really clear that the people who write these things have absolutely no idea what happens on the ground. And even myself, I would assume if you had a granny flat, you could probably rent it. Like, I don't know, but yeah, so overnight they just decided that you can rent granny flats, and that just made an absolute nightmare for us.
Aren't we talking just minuscule difference to the amount of dwellings?
Absolutely.
Yeah.
But these are the things that the government have been implementing, and this is all they're offering. So,
I know all the social housing providers, which is sort of government funded, they've all got their money. They know the money's coming.
Right.
So they want it. The state government needs a good news story, so they're hunting down for social housing sites at the moment.
Are they
To get in
finding
front-
any?
Well, they have fairly strict criteria because you can imagine the surrounding residents. No one loves that happening in their neighbourhood.
Yeah.
So they like it zoned ready with all their criteria.
I saw something the other night actually. There was a story on exactly that. Some pockets of land that they've actually got. I think one was at Chermside. There was a few in different areas, and they've actually got the land and temporary fence around it, but they're just not starting it because at the moment it's not stacking up for them to actually do it.
Right.
So I guess that construction cost as well probably comes into play. They've got to be wary how much they spend.
It'll be a really interesting discussion. Where's everyone going to live when that construction cost thing is out of it?
Yeah.
When the market's adjusted to people who have bought medium to high density sites, have adjusted to current construction pricing, that'll be a very interesting market.
I feel. Oh, sorry.
Look, I think it'll be actually just a far more normal market.
Yeah.
You don't feel so. I feel as if as the builders and subbies and everyone see, and this is my personal opinion. I don't get too involved in it, but as they see the developer making more money, they're just going to charge more money. Do you see that as a potential outcome? Because I certainly do. Because there's the prices of the price of labour is huge. Like I don't know what that's increased, but I would imagine at least 50%. But like there's still just as many labourers. They're just charging double the amount and being more picky about what they do. So then it's like if everyone's starting to make more money because the prices are matching up and everyone's used to it, I'll just go, oh well, just put a bit more on. I don't know.
I think it leads us into the discussion around infrastructure, because I think in southeast Queensland what we've seen in that construction industry is a big shift of workers to big, large government funded projects, where we've got the Cross River Rail, we've got Queen's Wharf, we've got, not all government funded, Queen's Wharf is privately funded, but we've got some massive infrastructure development. We've got the Brisbane Metro underway. We're also going to see redevelopment of the Gabba. We're going to see Brisbane Live constructed. These things require labour, and the labour the labour pool from the general market to go onto these big projects means that the availability of labour for the smaller projects is more limited, and I guess because of that lower supply, they have the ability to charge higher prices.
I don't think it'll matter too much, because as I say, if you've got a development and what are the elements in looking at the feasibility, it's like how much it sells for, they can work out that.
Yeah.
What are the costs involved in the miscellaneous costs like marketing, finance, that sort of stuff, and then the construction costs, like the market will settle.
Yeah.
So if labour goes up, labour goes up.
Yeah.
Just like concrete goes up, labour goes up, and I totally agree, because all those workers are competing, and it'll just go up. So something's got to give, and the only lever they can give to make the development stack up is land. So I just think the market will adjust on that land thing, and the market will just work through where people paid higher prices, and people will have to start selling, particularly that inner city where they might be more geared. And it'll just adjust, and it'll work its way through, and land will come down to some of that stuff. So the difference is those owners in that middle inner to middle market, they're sort of more geared, where the land supply in that extremities where you do the land subdivision, the extremities of town, quite often that's just mums and dads owners who have they've paid $1 million to live in the extremities of town. Maybe they've paid a lot less actually. And they like a pony, and they like quieter living. All of a sudden, through population growth and a favourable town plan, they're $500, $1 million block of land's now worth $8 million. But they're actually they're not sophisticated enough to sort of go and borrow against that. So when the market comes back a bit, they're not leveraged, and someone's going, hurry up, now you have to sell. If so it was worth $10 million, now it's worth $9 million. There's no pressure on them, because it still only owes them $700,000. So that land out there doesn't matter, but I think it'll start to churn. The market will start turning, and it'll just, land values will come down, and the market will stabilise. And look, we talk about a lot of problems, but where are the opportunities? The opportunity is a medium density product. Or if you can buy land, have the guts to buy land on the fringes of the South East Queensland regional plan that's not constrained. So there are the opportunities.
Where are you seeing those opportunities, Andrew, in the market in Brisbane at the moment? In what locations?
People can just take a long-term view. There's just been, I cannot stress enough how little units and townhouses are being developed. Phenomenal low. And land, it's what I was talking about. It's the fragmentation which is the issue. So if you're clever enough to put 3 or 4 owners together, and fair play to you, because that's like herding cats with greedy kids in the background.
Are you seeing anything in the build to rent space? Because that's something that is an emerging market. I know it's something that we've seen discussed at presentations that we've attended. And again, the big obstacle there is the feasibility. Getting them out of the ground and getting them constructed.
I haven't done a lot of it. There's sort of 4 or 5 things that are on the go in Brisbane at the moment. But I'm not sure the press about that topic is reflective of the amount of activity that's actually there. To me, the market's all about the flavour of the month is sustainability and build to rent. That's all anyone wants to talk about. I'm not sure it's on the ground, those issues. No.
Interesting, because we're led to believe there's this future supply coming, but I think what's clear here in our discussions tonight, that it's just not there.
I just don't think it's been identified as the difference between a large-scale residential unit complex versus the build to rent. I don't think the market understands it. I don't myself. I mean, I get the ownership structure, and it's unique. Australia is in this position, we haven't had it, but it hasn't actually been explained very well to the public. What's the big difference? Like, where are the difference in, like, is it less car parking? Does that make it better? Is there more common facilities? Like, the market doesn't know. It's like, oh, that sounds cool. The rest of the world's doing it, so we should be up for that.
Yeah, they're all for young professionals, like the granny flats, these small apartments. They're not appealing to families, and they're just need accommodation. So it's a big high-rise there, one bed, one bath, third car. What family would live in that? The granny flat, one family. So it'll be great for students and for young professionals, but not for families. And that's that I see supply in that space.
So it's building the product and supplying the product that the market needs and demands, and maybe there's been a mismatch there over recent years, and that's why we've landed in this situation that we've landed in as well. I did want to touch on, and Alex, this is where your expertise might come in, Brisbane's sustainable growth strategy. Now, as recently as a couple of weeks ago, we heard Brisbane's Lord Mayor come out and talk about potential rezoning of residential land to much higher density around some of the major shopping precincts in Brisbane, and some of the sites that were included and become part of this growth strategy are Indooroopilly, Toombul, Toowong, Chermside, Carindale and Garden City. Now, of course, this is not land that's already zoned for the higher density. There is some medium density around these sites, but the potential to rezone. And we also heard the Lord Mayor state that South Brisbane will be similar in height to the CBD through residential high density development, and it will look like a second CBD. What do you say to that?
Yeah, I mean, so these are guidelines, these documents that come out, that kind of like, this would be lovely if this happened, it's not policy. That said, it very much drives what happens in the planning teams. So, it's for sure short-sighted. So, and the reason I say that, I haven't read the document top to bottom, and I'm sure it's very well written and thought out, but, I know that a lot of the land that it's taking out is industrial land. So, council 10 years ago put out an industrial growth strategy which basically said there's not enough industrial land. They redid it like a year ago, and we're like, there still isn't enough. We need to protect industrial land at all costs. And then like 6 months later, like, we're going to rezone all of that to residential. So like, are they just now creating another crisis? Like, and not really addressing the problems that we've kind of just spoken about here? Like, what are they going to do? Open up a bunch of land for developers to come in? The people who own in those areas probably aren't going to sell now. All the prices just went up substantially, unless, of course, someone already owned that land by chance. And that's probably what's happened. But I mean, it's a good, anything is a good thing, I think, at this point in time. I don't think Brisbane's doing a terrible job at trying to incentivise residential growth, but once those changes start actually happening to the planning scheme, because right now that document's just like a lovely document for the media, but when those things start actually getting implemented into the planning scheme, I really hope it's done well, because if it's not done well, it's just going to be an absolute nightmare and cause more headaches than it's actually,
I think Melinda just named every large shopping centre there in Brisbane anyway. And those areas, when you talk about Chermside and Indooroopilly, everywhere where there's a large shopping centre, it sounds like that's where they want to target it to build those high-rises.
Yeah, so I mean, the Planning 101 is, you want more people close to services and public transport. So most of those nodes are transport-oriented areas. So, it makes sense to upzone in those areas, which some of them don't, they don't have. Like, they're covered with low impact industry uses. It's like, what the hell is this doing here? This should be somewhere else. People should be living here. So it makes sense, but I just hope it's rolled out properly.
And to your point earlier, Andrew, around opening up more land that can potentially be redeveloped in the future as well, I think that the important thing that people need to understand is that land needs to be close to transport, needs to be close to jobs, etc. Otherwise, we're just going to create another headache, which is going to be a transportation and a road. More road traffic, etc. Every Queenslander or everyone that relocates to Queensland, to Brisbane, generally they'll bring a car with them. It's another car on the road. I read a report by RACQ just recently which indicated that the traffic post-COVID is actually worse than it was pre-COVID. And that's not a surprise when we look at some of the population growth figures that we've got. And I'm just going to read this out to you because this is actually incredible. The number of people per week that relocated to Brisbane up to in the year up to September 2022, which is the most recent data that was just released last week. 2,201 people relocated to Queensland every single week. So this is huge volumes of people. Every person that relocates needs a home. They need somewhere to live. So most people will initially rent, which is why there's initially stress on that rental market. Once they know where they want to live, then they potentially would buy. Not only do we have not enough rental properties available to rent, we've also got listing volumes in terms of the sales that are tracking at the moment about 30% lower than our 5-year average. So it's across the board. There's not a lot to rent, there's not a lot to buy, and yet we've got more and more people relocating, wanting to buy, wanting to rent. And from what we've discussed tonight, it just doesn't appear to be any immediate solutions that are out there.
I don't think so, no.
Yeah, I mean, you can't blame people. I always say you can't blame people want to live up here. I think we're all pretty lucky up here with what we have, the lifestyle, the affordability, and that's another reason why probably so many people do want to move up this way, is because it is more affordable as well. You talk from the rental side of it, the housing, you go and do that in Sydney or Melbourne. I think you'll be paying a lot more.
We love renting to Sydney and Melbourne tenants because they always seem to want to pay over so cheap.
They think it's still cheap.
I just think it's a good story. I just don't think the press is reflective of the long-term market. I mean, you talked about the market's up 40% and then people have given back 8%. You go to the casino and you're up $100 and you walk out 92, you're still in front, aren't you? Like we're not bad whingers in Australia. So I think if you're looking at the long-term medium, look, just past the short-term, it's very favourable. So we're talking about a lot of problems, but the positives are, with this much population growth, we've still got a house price difference between the southern states. And unlike in the past, all the infrastructure is talked about. I mean, this has to be delivered because of the Olympics. I mean, as a commercial real estate agent, when you talk about the Olympics, I sort of wince because it sounds like you're promoting something for 1 month. But what I'm promoting is guaranteed jobs. So all these people relocating, they actually are going to have a job.
Yeah.
So that's the difference. So it's a very positive story. The market's just gone through a bit of an abnormal time. It's adjusting, but buyers out there, get in there and have a crack now, because I cannot see it going. Labour's not going down. Construction costs are going at best steady. There's pockets that are a bit quieter than normal, so developers should be buying sites. So look, this is the sort of blimp you want to go for now.
I like the way you put that in. I mean, it's when you talk about media, good news doesn't sell newspapers.
No.
It's usually the sad stories or the doom and gloom, and that's what people are interested in. It's not the good news that people go, oh, I want to listen to all that good news, because if you look at what we're talking about, property prices are great in southeast Queensland. The amount of people that want to buy, that want to move here, that want to live here, invest, purchase, whatever it is, it's
just encourage all people to look in the detail, because, as we said, Australians have a very high ownership percentage compared to the other part of the world. So if it's a slow day in the newspapers, anything related to a property is going to get interest. So just, as we said earlier, just drill down into your market. Hang on, is that relevant to me? Is that actually the truth?
Absolutely. Look, I think that's why we run, our podcast, Brisbane Property Podcast, every week. We try to actually cut through the headlines, because a lot of the headlines that we consistently hear are not actually in line with what we might be seeing on the ground by being out every weekend. And I absolutely agree with your message there, Andrew. Whilst we focused on the fact that there is a shortage of properties to buy, a shortage of properties to rent, let's not forget the fundamentals and what that means. When you have a shortage of something and yet you've got high demand, it means prices are likely to escalate upward. Now, yes, we've seen some retraction, especially in the housing market over the last 12 months. We hit a peak in June last year and it's come off, but we've stabilised, and in fact we're expecting the current month's data to show some very, very modest price improvements at a median level. That said, we've also been in an interest rate environment that's been increasing. Not many people in the last 10 years have experienced such a rapid rise, in interest rates. A lot of people have got into the market when interest rates have only ever been declining. So it's just different. It feels different. And the fundamentals really haven't changed for Brisbane. What's changed is consumer confidence. And the big thing that has influenced and swayed consumer confidence is the media and the media messaging. And, as soon as we remove some of the sensationalized headlines and we get back to the basics of what's actually happening on the ground, what are we seeing in terms of supply and in terms of demand, and what does that mean for prices long term and sustainability long term of property markets, the story is a very good news story in that regard. And I think let's not forget that as we're sharing all of this information about where people want to live. The bad news story, I guess, if you want to take it there, is it's going to be tough for tenants. And, there's really no short-term solution that is in sight. So, I think that's probably the hardest thing for people that do rely on providing or renting in the market. It is going to continue to be tough if you are a renter in the market, especially here in Brisbane. So, potentially compromising on what type of property that you're wanting to live in is going to be the best way to ensure that you're not spending too much of your take-home income on accommodation.
But then on the positive, that, as I said, is the investor side of it. You probably get a tenant. Yeah. So if you can afford to buy a property and the demand is there. I mean, we went to a property last week, for example, here, and this shows you the demand side of it. There were over 50 groups at this property. We actually had a look at it, and then when they had the open home, there was over 50 groups. 11 offers went on the property. Now that's a lot of people wanting to buy property. So there's that demand there, and I think if you're an investor or people wanting to buy property, buying property where there's 11 offers, people want to buy that sort of product, and you'll probably rent it out as well. Yeah, so it's a positive thing for an investor if that's what people are looking for. And they're looking to buy in sort of Brisbane and southeast Queensland. It's an affordable area, and you'll get good tenants for it, I'd say.
I did want to say at this point, if any of the audience do have questions, you're welcome to send them through. We are happy to answer questions, but we will be wrapping up very soon. So if no questions do come through, then we'll just keep concluding with the topics that we're talking about.
So I'll just get a little bit of a summary of everyone. I'll throw everyone out to everyone to have a little bit of a comment on where we see things happening, where we see things changing. Again, at one of the breakfasts we went to, there was a couple of ones I'll mention. There was a developer, I won't say who they were. They do quite a lot of big developments. They actually said that they had about $10 million worth of product that is it's under construction. None of it's pre-sold, and they're actually waiting to finish everything to bring it to the market. I can tell you off air for you later too. Because you look at me like that, Andrew, you want to know who it is. And then there's others that there was another guy that was talking about, an analyst that we were talking to, and he was talking about the Europe, the English model. So over in England, how they build the towers to supply for people for accommodation, and he said that could be something that they might look at here, is building towers to rent. But what's going to happen to those towers? Will they just turn into the slums and like other places over in Europe? So it does rely a lot on that private investors to supply that rental market, and that's where I think we've got to encourage more of that to supply accommodation for people. The private investors to get involved into something that they can afford and is affordable now, which I know, as you said, Andrew, we don't talk about the Olympics on that just changing it, but it's what is going to happen in the lead up to it. It's not the Olympics, it's the infrastructure and the change in Brisbane especially, what's going to happen in this next 9-10 years. Yeah, the Olympics will come and go, but the legacy that it'll leave and how it's going to change Brisbane is just going to be phenomenal. It'll change Brisbane forever, I think.
Yeah, it's exciting.
So it is very exciting. Bit of a summary. I'll throw it to Alex to start. What are your thoughts? And what do you think? What's your magic solution? Do we rezone? Do we change things? What do we do?
Yeah, look, I don't think it's a planning solution. I always say everything can be solved with a good town planner, but not really. But I don't think it's a planning solution. I think it's an economics issue. I think there needs to be some kind of stimulus. But it is very doom and gloom seemingly right now. But I started my business just before the GFC, and I was like, yeah, it's all over. That was fun. I suppose I'll go back to uni and study something else. And then everything came good. Yep. And then that's happened in my career. 3 or 4 times. And every time something really bad's going to happen and everything just kind of shifts around, finds its balancing spot, and then everyone's okay. So I think right now with the press and the media, everything's kind of doom and gloom. Everything's really bad. And it is for some people. I'm not discounting that. But I have a feeling it's just going to work itself out, to be honest.
Yep. Cool. Yeah. So you've heard that from Alex. If anyone's interested or anyone needs help with town planning, reach out to Stefan Town Planning and they will definitely help you out. Andrew?
Well, I think if we talk about all the problems we've discussed, I think they're twofold. The first one is that immediate affordability, where can you rent? I don't quite know the answer, but I think it's got to be something legislative to do, encouraging people investors from a financial point of view, because it's got to happen quickly. It's going to take far too long to build everything to solve that immediate problem. So that's sort of my thinking of that on that first part of the problem. And the second part is just we are in a market, in a location in the world which is getting a lot of population growth, and it's been like that for a while, but it's really amping up now. It's an exciting time. So it looks like, as has always been the case, that we're a bit undersupplied with land. So the land boundaries have got to be pushed out. The governments and councils have got to talk to each other more to make sure it's actually usable land. And I just see so much capacity in those middle suburbs for either medium rise units or townhouses. I really think that can get some big numbers in. And at granny flats, we're fiddling at the edges enough of that shit.
Agreed.
Yeah, well, again, Andrew, Burke, Ray White Special Projects. If there's anything you need, obviously with that side of things, reach out to Andrew. He's always happy to help. Jonathan?
I think I get to a privilege of working with lots of sophisticated investors, and I never hear an owner say, I wish I sold earlier. They all say, I wish I never sold.
Yeah.
And I think over the next 10 years, I feel like we've won the lottery to live in Brisbane and be part of the property market. And I think people who are investing now or have invested are going to see some really good results over the next 10 years, and I'm excited to be part of it.
Cool. Very positive. Thank you.
Yep.
Jonathan Bell, Housemark. So any property management side of things, reach out to Jonathan. I'll throw it over to you, boss.
Look, I'm going to take an approach where I'm going to agree with some of Andrew's recommendations. I think that rather than disincentivising private mum and dad investors, we need to see some incentive to encourage more investors to get into the market here in Queensland. If we provide 97% of the rental accommodation for Queenslanders, we need to actually up the ante in terms of encouraging more people to invest, to actually open up immediate housing for people that need it. So that would be my solution. Obviously, the likelihood of that, pretty slim, but I think that's the only immediate solution that we can see.
Fantastic. So Melinda, myself, Streamline Property Buyers, obviously we do our podcast, as we said, the Brisbane Property Podcast, always once a week we throw out information to help everyone. I hope it's been a good chat. I hope everyone's learnt and got some things out of tonight. So yeah, thanks very much for tuning in, and we'll be in contact. Thanks very much. Bye for now.
Bye. How'd we go?
Well done, team.